following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Got a little bounce in oil this morning, and almost a 5% move. When you get down to $20, a 5% move's what? $1. So we're going to take a look at oil. And the weekly here, I'm going to kind of just go back to it, just kind of going back in time a little bit. As you'll notice, we've had selling below profiles, finding resistance, breakdowns, selling resistance on the way down. We haven't even talked about nibbling on the long side on this show till we got around. There was some kind of intermediate trading opportunities along the way that we've spoken of, but we haven't really started talking about getting long here in any type of fashion. 30, 32, 33 when we started kind of breaking some strides here. And here's the daily, as you can see. We've been hitting this pretty hard on the short side up until lately. So we've been taking some shots lately. And while we've been taking some of these shots lately, and again, we talked about let's get a new profile now. We caught a little bounce here around 29, 26, and then, talked about this crowding here, not being a big fan of this kind of dumping down here on the unfair lows again. And then we talked about the flush. The retracement back up, have to get above 29, 26, get a close here. And I still think that someone else should be allowed to try to find the bottom here when we're below profiles. And that would be in a kind of a money-saving attitude on our side, is let somebody else kind of get on the field and swing the sword. And we'll just kind of wait and see who wins now. And I'm still in that camp, but the reason that we've been relatively, hey, there's some things to pay attention to here is, and here's yesterday's action on the long-term weekly, and we talked about this 52.69 DMZ kind of, if you will, up into that 54.13, and in my opinion was the next chance to really start trying to pick some battles here on the XLE, and noticing that we've made some higher lows along the way on the XLE, and crude oil has been making those lower lows. It has given some kind of indication that, ExxonMobil, there's a couple other things we've been looking at that have obviously been kind of not exactly terrified that oil continues to go down. Here's ExxonMobil. Yesterday, we talked about, waiting for a retracement here. Here's that 79.58. That's the POC here. We talked about that's kind of the top of the hill. We're kind of sitting on it as of yesterday's close. But, we had a new profile appear or attempt to appear the day before on ExxonMobil. That's usually a sign you got to start looking at, hey, we've reached some targets in the interim. And this is what I was really hoping that the notes would do the other day, or excuse me, gold, was this type of action. We have the new profile attempt to appear. We have it lock in, and then we basically explore the entire fair auction and find new support based on this new profile. And this is, generally speaking, how this a lot of times will act to continue the trend up, or, allow you to kind of save a little, save a couple of points and then kind of re-enter the trade. It worked out good on ExxonMobil. I've kind of gotten away from crude oil for a second here almost, but what I'm trying to say is a lot of these stocks in the XLE have not been going to hell in a handbasket. The XLE itself, that index, has been showing, hey, you know what? Not the end of the world yet. And crude oil may therefore have a little bit of a move on the north side here at some point. So I'm just kind of sitting there waiting patiently for some things to lean on. As we talk about that, we're going to look at the Canadian dollar really quick. And here's the situation here. You know, we've come down. We've talked about this as crude oil's kind of been making those lower lows. Canadian dollar's kind of, again, this is kind of coupled with the U.S. dollar. But remember that correlation Mr. Pesavento talks about here. This is also something else kind of coming into play in my mind, along with the ruble, which we talked about yesterday. So, and let me just kind of pull this up. Yeah, I mean, these, you know, so I'm still a big fan of not shorting crude oil down here. I'm going to go back to crude oil, the March contract. And here's your 240s. I'm still not a fan of getting long this unless we have a new profile to end this whole summary of this conversation. A new profile here that I can lean on, or we just get back above in the balanced area above 29.26 and then can use that as something to lean on the long side, and more importantly, place the stops. Let's see here. I'm going to look at the DIN really quick, see if we got any questions. Okay, I'm just going on what E-Signal, by the way, John from Philadelphia, is using as the continuous contract. They're still using March. So let me look at April for you. Yeah, I mean, I'm just going by what the general continuous contract is on E-Signal here, and they're still using March. So, okay, let's see here. Yeah, we'll look at BP. Let me just keep reading here. Let me see what kind of questions we have. XOM. Well, actually, are you supposed to buy XOM here? That's a question we're going to look at. I'm a big fan of strong stocks in a weak market or a weak sector, and crude oil's, obviously been heading south. I'm a big fan of using this 77 to 78 area, 77.66 to 78.14 as kind of a dig-in point. And I actually think this thing's actually going back to 84. We've talked about this trade from the 73.29 area when we had a retracement back up. We were talking about long-term higher lows versus crude oil lower lows. We actually talked about this about last week or the week before. And, is this trade over? I don't think so. I think we're going to at least get up to 84.29. Let me see here. I'm not from Australia. We're going to come back and answer a couple. Come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We probably stayed on crude oil and some things about ExxonMobil longer than we needed to a while ago, but just, I still think this is an area where crude oil could really, give you some bang for your buck if you play it right. But I'm not still convinced. And again, John from Philadelphia, I apologize if some of you guys are probably trading the April contract. I'm just kind of trying to stay with what eSignal has as the front month on their continuous. I may be wrong. If you guys want me to look at anything ever, just feel free to ask. And somebody threw in there a while ago in the den that I was from South Carolina. Those are fighting words around here. So I can tell you're trying to pick a fight, Peak D. Just kidding. We're going to take a look at utilities really quick. And this has been something, it's kind of been, the darling of the stock world for a little while here. And, Tom brought up something, this dividend play on the utilities versus where the 10-year's at and things like that. And, we had this, again, the yellow peel back happening in the scanner and then the new profile. And then, I always like to look at these as, let's use that as a area to kind of gather ourselves. And if we're going to be able to buy this again after those particular bars, and that didn't work out great on gold the other day, but this 45.14 is new support on the XLU. Let's take a look also at something you're asking about OIH in just a second. So that's the situation on the XLU, and that's kind of the theme of a lot of simple mechanisms that I use. I don't, I look at breath situations ranking. The XLU kind of started getting out of favor here a little bit, which is actually, again, this is all kind of interconnected. So who knows what really is what's going on. And when I look at the 10-year, we kind of got a similar situation happening here. We had a big bar yesterday. We've kind of got this, and I'm going to show you this in the scanner, which is why this is so, can I say friggin' cool? Al, is friggin' on the list I'm not supposed to say? If it is, I might start using it all the time. You can say that. Thank you. So here's a 10-year. Here's that yellow peel back happening. And that's just letting you know, if you've been long on a long-term basis, weekly, daily, you got to look at these indications. This happened on gold. Again, we're going to review that because it's not 100% guaranteed that you're going to have a new profile and you're actually going to explore that whole fair auction. But this, utilities kind of starting to get out of favor a little bit. 10-year having a little bit of a lid on it possibly for a while. All these things, in my opinion, are kind of bullish for the U.S. stock market also. So, and again, when we got to talk about so many things today, but here's a chart of the 10-year. I like Georgia too. Don't like South Carolina though. Fighting words. That's the 10-year situation. And here's gold. So I just want to point out that it doesn't always work perfectly like that. So here's that yellow peel back. Here's the new profile. Gold explodes. And we didn't explore this kind of pullback. I think we were talking about 1175, 1167. Obviously, was the big support here. And now we're trading 1241 on gold. So I just wanted to point out that it doesn't always work out. But it is a cool feature. Shanghai still closed. Remember what did Chevy Chase say on Saturday Night Live? Generalissimo Francisco Franco is still dead. Remember that? The Shanghai is still closed. Was his name Francisco Franco? Franco. How about that? I need some paramilitary, groups to do some things around here. It might boil down to that in the U.S. You never know. You never know. That's it. Thank you, Peak D. All right. We're just going to hit a couple of things here before we get into some stocks. The silver situation. This is kind of astonished me, actually. It's been, again, percentage-wise, I haven't checked on the movement here, but picking a battle at 15-14, 15-15, this was kind of what I was saying before was kind of the lofty aspirations. Remember, we're still in a downtrend on this, and we're still in a long-term balanced area. But the intermediate, what do you do with silver now? I'm just not a big fan of gold or silver just going to the moon for any reason. They've had a good run here, but this is kind of a no trade for me right now. I haven't really paid attention to silver because for me, it's been a weaker instrument other than gold, and I've been a little bit more bearish than anything. But I haven't personally traded it. I guess I should be like Kramer more often and say that I've got 4 shares of General Electric in my gifted fund, and therefore I can say that I've got skin in the game. Should I do something like that? Kramer's just the best. I love him. If you guys watch this show, you know I love him. Soybeans had a nice little run here, and I want to talk about this a little bit further when we come back from break, because some of the grains. I'm sorry, we're on the. Let me just make sure. Yeah, we're going to talk about a little bit more about grains in general when I come back after this break. What happened to Ron Insana? That's actually a good thought, Peak. The guy was a commentator, and then he turned into a fund manager for a while, and I think he got his butt kicked, right? Is that kind of what happened? And now he's just kind of lost, and he comes on every once in a while with his head down. Yeah, I mean, smartest guy in the room. Look what happened. I don't wish anything bad on anyone, by the way, but it was interesting to watch him come on with his head hung low, whimpering back to CNBC, the pinnacle of existence for the financial world, CNBC. We're going to take a look at the dollar. Now, this is interesting, and again, we're just kind of throwing out a lot of the things that might affect the U.S. stock market before we get into the S&Ps here. Interesting situation on the dollar. Been waiting for this. This is our daily. You got a little bit of a kind of a contra trade situation here, possibly setting up, but this is again kind of a wait and see. Oh God, I forgot to do British Petroleum. Hold on. I'm sorry. If I forget, which I have a tendency to do, the short-term memory is completely over. Got some prints on BP this morning. Let me just make sure something here. BP. We're going to come right back and talk about BP in just a second here, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back. There's a lot of good questions and things being thrown out in the den, and sometimes I miss them. I'm going to try to hit them really quick. British Petroleum, just to sum this up, and this really encapsulates everything I think about when trading stocks. It's been an underperformer relative to a lot of other XLE stocks. And oil in general has kind of showed anomalies. This is not one of them. And therefore, I mean, we could have a big snapback in this particular stock in general. There's no question about it. But, in my opinion, this is something not on my radar screen because you've got better longs out there. If that's your question about is this a long or a short, I'm just not even looking at it because it didn't show its hand early. Now, again, it could, it's up significantly this morning. Well, not significantly, but it's rallying up a little bit with gold being up. But ask Ron Insana about this. I think Ron would have, if he was still a manager, would have put this in his portfolio. Thomas DeMark. Interesting story. When I went over to Bloomberg, there was one of the only reason that a lot of our information is actually free on the Bloomberg terminal. You got to pay, and this kind of comes back to Thomas DeMark in a second. You've got to pay when you throw everything else in, exchange fees and blah, 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 and another couple of things they nick you with. Tom will tell you this. It ends up being $2,000 a month, no matter how you look at it. So you're paying $24,000 a year to look at a Bloomberg terminal, which most institutional folks, 90% of the reason they have that terminal is to use this IB chat function, which allows them to kind of communicate with other people supposedly in the know. That being said, I've found out over the years that there's obviously a lot of smart people that have Bloomberg terminals, but it's being in a community, and a lot of people that have these terminals raise money. They're not necessarily traders. If they're traders, a lot of times they don't use Bloomberg for the trading part of it or the analytic, a lot of you get my drift here. So one of the things we did was to say, look, we're going to do a kind of an unlimited licensing distribution deal with them. And that worked out pretty good for us. But one of the things going back to DeMark, one of the things that they were terrified of, that they never wanted to get in the situation again hadn't had enough coffee. So they wanted to be able to extend the contract constantly forever if they wanted to. So they've continued to do that. And the reason that they wanted that clause in there was because Thomas DeMark had his information also in a kind of a distribution deal with them for free for users for a long time. And then all of a sudden, because that contract expiration thing was in there, he all of a sudden acquired all these people that enjoyed his information and then said, oh, by the way, I'm not going to go down the road of the licensing deal to Bloomberg anymore. That's over. So many Bloomberg users were kind of already addicted to DeMark stuff, and we have thousands of people that access our free information on there every day. He kind of pulled the rug. A lot of people that use Bloomberg were kind of already addicted to this stuff, and then he started charging. And there's actually kind of a big riff between Bloomberg and him over that, and it's been that way, and that's why they kind of did the contract the way they did with us. So interesting note, maybe. So DeMark's information too, and I should be showing a chart here, I guess. Let's show the S&Ps. DeMark's information, really good. A lot of people use that information coupled with the profiles, a lot of institutional guys, to kind of get that double confirmation. But, his information sometimes repaints those numbers. I mean, he's got a number system, if you guys know about DeMark a little bit. 9, 13 are the big numbers for him. And again, I don't really pay attention to a lot of other folks' information. I should. But a lot of times his numbers will repaint themselves in the past, so like there'll be a 6 here, and then you go about 10 more bars, and if it goes up, they'll repaint a 9. It's really, really weird, and makes history look really good. So again, not slamming them, just stating some facts. Here we go. We're taking a look at oil again. Really, really showing some legs here. Starting to get moving. That April contract actually is above the unfair lows, I think, now on the daily. And we'll probably be switching that if E-signal switches. So we've been talking about oil. You got to look at the XLE. You've got to be willing to, and we're going to go back to gold in a second, Tucker. in just a second. But basically, DeMarc got about 1,000 people addicted to his stuff, and then they started paying him instead of just the licensing deal. And then they never will get in a situation like that again. I'm sorry. Where are we at here? Oh, we're going to the XLE. Here we go. So again, I'm looking for, if you've been watching this show, I'm always looking for strength in a situation like this. Let's just take a look at our one of our favorites here, Southwestern, coming back into that, again, new profile, attempted to appear. We had the orange bar. Here's the profile. And then we got support here around 796 now on this little thing. And pre-market, I don't think we're printing yet. Let me see. No, we're not on SWN. But I'm just going to kind of click this, and then you've got the same guys up here. And if you want to go into the neutral section here, you can still find some things that are like ExxonMobil is showing an arrow up there. That means that it's kind of saying it's in an uptrend on the weekly, even though it's in the balanced area. And then you've got these green shoots that started happening on the lower time frames. And I think ExxonMobil's printing right now, right? Let me just take a look at it. Yeah, 80.60. It looks like we're printing pre-market. So we're getting up into the daily unfair high. But I actually think a lot of these could just run now. Here's gold. We're going to go back to that. Pre-market looks like we're trading 1234. I think your support area on gold is just, unfortunately, you got to just sit tight here. 1200, 1201, right in there. But again, I haven't been a big proponent of going long gold, and I'm not really looking to buy support on this thing right now. It's just I'm actually looking for some indications to try to do a contra trade on this on the short side. But gold, I'm a little standoffish when it comes to that product right now. Let me see if the XLE is printing yet. Yeah, it looks like we're trading 54.38. We're going to come back and talk about that when we come back from this break, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We've kind of been focusing on oil and how do you kind of wring some points out of this thing right now. I went to the kind of the gang of 5, as I've been calling them on the XLE. Cabot Oil. This some interesting little situations here. We kind of started bouncing off those daily unfair lows, as you can see it. There's some unfair highs on the daily, 2074. I think we're trading pre-market right now. Looks like a little above, around 20 or whatever. You could get a nice pop here, get back into at least some targets on the top of the box here. And, here's the weekly. This is why some of these started showing themselves early. Really cool little pops that might happen, and just getting right up to the top of the balanced area at bare minimum. Here's EQT, a very similar situation. We've closed above on the weekly. We've come back. If you guys are seeing this, I hope so, if my charts are showing. And you've come back to the top of the box on the weekly, 55.82. You've kind of got the support at the bottom of the profile on the daily. I mean, I love these trades. I mean, really, these are cool little situations, and they're relatively safe trades. But again, put the stops in. These are decent little risk reward scenarios. Here's Range Resources. Here's the daily here. Here's the weekly. We've come back and gotten to the top of these profiles in the weekly. The gang of 5 is a very cool little gang. It's something that Mark Rubio, he kind of shaved down the gang of 8. This is kind of what he's pushing right now, the gang of 5. And here we go. Just seeing if anybody's awake. And here's the situation on SE. I like a lot of these trades still. SWN also. That's the deal. You guys missed it yesterday. Back in the pet area over here. These chickens that are running around in the background, sometimes they're huge. So they look like dogs with gloves on their head. That's how big they are. But looked like a 50-pound hawk came in and just clipped one yesterday. It was kind of unbelievable and ripped the head off. And then we had chicken pastry yesterday. Just really wild how that happens. I almost cried. Anyway. Here we go. The XLF, we're going to talk about this a little bit. Again, is this something that could have a real massive snapback because it's kind of oversold? Yes. But, pre-market, what are we at here? $19.99 we're printing right now. So we're just kind of getting back, into the top of our profile on the 240s here. If you're going to trade a contra trade in a sector that's just still got the fleas on it, you want to try to use some breakage of the regulation of this trade down. If you look at these 240s, happened once really since we were back in the 24s, 24.50. Now you're sub 20. If you can break this might be something. Again, I hate this sector right now, and the relative strength, relative weakness trading system might be a little moronic to kind of look at this for longs. But if you got to, if somebody's putting a gun to your head and got to play around with this, you've got some unfair highs around 20.03 that you can kind of use as leverage. If it starts getting some legs, you can at least orient some stops there. But again, I think wishful thinking on this is going to be 21, 22, and I don't even think that's going to happen. So if you're playing the XLF, if you're looking at financials, in my opinion, on any rallies, you've got some better opportunities out there other than that, and that's just the way it is. Here we go. The S&Ps. Pretty good washout yesterday. I will admit to that, but here's our weekly unfair lows, this 1832.70 into this daily 1846. And there's that unfair low on the daily. So, I'd really, again, like to see this thing. If you're using this as a collection area, you can also just look at that 1833, 1832 area to orient stops below. I'm kind of, again, you watch this show, I've kind of been thinking about, we kind of come down into the bottom of our profile on a weekly. This is Friday. I think it's Friday. Yeah. And this Friday close is going to be super important here. And I'm kind of a bigger fan of just kind of playing around with this on the long side. If crude oil starts rallying significantly, I think that's going to kind of run the show. And right now, this doesn't look like a bad little situation on crude oil, so I'm a little bit more longish on the S&Ps than anything else. If you go back into the scanner, though, and you look at the dashboard, and you just kind of, look at this from a long-term basis, this breadth situation, again, we talk about this a lot. I mean, the long-term trade has definitely been to stay with the trend, sell resistance. But we've kind of had some decent overextended situations here on the weekly, and I'm just looking at a trade and bounce here still, and just getting stopped out if I have to. All right, let's take a look at a currency or two here, because I've left these alone for a while. I'm going to go look at the Australian dollar really quick, and here it is. Okay, so the big number we've talked about, and this has kind of been in force since when? This weekly profile has been in force since September. Yeah, September. It kind of held up remarkably well, but we always talked about kind of leveraging off of that unfair low around 71.69. I'm still looking at that as if we can get back above, get a weekly close above, we could explore that up into the 74 and change. Here's the euro situation. Here's the weekly. Juan talked about this yesterday, but we talked about this 113.52 weekly unfair high was targets on this, and then I'm a big fan of shorting the euro still. We've come off really nicely. Let me stop playing around with the chart here. We've come off really nicely here. This is our daily. We just kind of touched that yesterday, that weekly unfair high. And remember, we can't, and here's the 240s, which is really cool now. We can't give actual prices on the charts here. We'd be breaking exchange dissemination rules, but we're giving you visuals of derivatives here. And you can kind of, the most important thing to me is the inflection point. So that's kind of what we're doing here. Here's our 60. This is our weekly. And again, I think we reached a high. Let me just go back to eSignal, which is where we get to our currency server here. And look at how these things trade. It's amazing. This will just wear your servers out. Oh, my God. Let me get back in here really quick. Let me pull up the euro really quick. Sell everything. I think oil's starting to... Yeah, I'm on the cloud here. Here we go. So here's the euro. in addition to everything else on the daily, we've got a new profile attempting to appear. So I think we put the stake in the ground on the euro for a while here up top. So again, leaning against that 113 and some change we just talked about. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're looking at the euro, and I just want to point this out. We're finishing up talking about that weekly unfair high around 113.52. Here's the landscape view. We kind of clipped that just to the tick almost, and now we're these dailies are down here. But the good news is also we've got an. I'm sorry. Here we go. Did I show the wrong one? Here we go. Yeah. No, we're good. On the euro. We've got, again, that yellow peel back happening. I showed you on the chart there. So we've got a really good stake in the ground coming off that weekly, new profile on the daily, and you'll have some new inflection points on the euro. But again, I'm a big fan of, if you watch this show, of hey, if it didn't work out, let's try it again. Either on the breakdown side or the sell resistance side, that happened. We got up there at that 113.52, almost to the tick, and just got away from it. And that's what you want to see when it comes to using those inflection. I mean, that's a really good sign. So let me check the DIN here. Pandora. Let me take a look at this. There's somebody in the den. Here we go. All right, so pre-market looks like 935. Here's a long-term on Pandora. As you can see, this is a long-term on Pandora. So we've obviously come off quite a bit, but let's just kind of keep drilling down. And where we at pre-market again, 935. So again, like the stock's in a downtrend. You're looking for resistance area. We reached a high of 964, and the unfair high is 973 on these dailies. I don't know what your MO is with this thing, but again, turning the wrench the same way until we have some technical damage. It's just not happening yet. I think above 973, that could be the case if we get a close above there, and then your targets are 1250 up top. But long. In my opinion, you got better longs out there than this one. But if you're going to play around with it, I think a daily close above 973 would probably be in order just to wait for. Then you use that as support. Hopefully we get a pullback for if you're considering going long. And then that weekly unfair low, that 1250 is your target on this. But again, might have some better relative strength instruments out there. And I'm going to go into the scanner really quick and just click on the custom sort called breakouts. And these are the stocks that have been kind of showing some strength in the market. It's just been getting hammered. Hormel Foods. Let's see. Kellogg. Again, probably boring to you guys trading internet stocks, but boring is good sometimes. Here's a weekly on Kellogg. Reynolds American. There's a weekly. Nice little situation. Just some things put on the radar screen that have completely been bucking this move down. Downtrend reversals. Here we go. Here's a couple of them. Akamai. Let's take a look at this. This is when you kind of start floating through the scanner, you're going to find little gems like this. This is our daily on Akamai. We're getting a breakout here, but we're getting back up into it's showing key reversal type situations, but you're coming back up on this one into again some weekly resistance here. So this one's not the best long in the world, but we're just putting some things on your radar screen for you to look at here. Riley Automotive. I like support at 243.70 on this one. Guys, you've been great. Stay tuned for Larry. We'll pick it back up Tuesday. Have a good 3-day weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.